Hi, my name's Steve Clapham. I'm the founder of Behind the Balance Sheet. We're a consultancy that does two things. We do bespoke work research for a small group of institutional clients. We do training, and we do that training physically for a group of institutional clients in London and Edinburgh. And we do it online. We've got an online training school at behindthebalancesheet.com. And during lockdown, we produced a free training program. And that free training program is called the 30/30 program. It's 30 days, 30 minutes a day. So if you go on my website, behindthebalancesheet.com/3030, you'll find that free program, sign up, and you'll get some really fun material, articles to read, podcasts to listen to, videos to watch. There's even a fun exercise to do. I hope you enjoy that.
Balance sheet restoration.
I think this was more about, companies are going to come out of this becoming more conservative. So we've had a period in which there's been almost an orgy of buybacks. If you weren't doing a buyback, you were, just not playing. And as a consequence, many US companies have got a high degree of leverage, higher than they would have had even going into the global financial crisis on it. But it's pretty obvious that, the corporate buyer has been the principal buyer in the last decade in the stock market. So more money's gone into the stock market from buybacks than from retail investors or from institutional investors. So we've had all these buybacks, and now when you've got your first actual physical board meeting and you're all sitting around the table, the first thing they're going to do is going to say, well, what have we learned from this pandemic? And there's going to be a long list. But one of the things, every company, not every single company, obviously some companies have had a benefit, but almost every company has had some adverse impact from this dreadful situation. And if you've been closed, you've had no revenue for weeks or months, obviously that will have a very detrimental effect on your balance sheet. And we will talk later, I'm sure, about the impact as the working capital unwinds and all the other issues. But just think about it. You came into this, you already had a high level of debt relative to history. And you're thinking, this could happen again. And you've emerged from it with an even higher level of debt. So the first thing you're going to do is you're going to say, well, guys, are we happy with this level of debt? And I think a lot of boards are going to say, well, actually, you know what? It'd be kind of nice to conserve some cash and restore our balance sheet back to the previous situation or perhaps something even better. So I think companies are going to be much more conservative in their spending in the general round. I mean, it's obviously individual companies will be different, but I think the average company will come out of this and will say, you know what, we've got too much debt. We need to restore our balance sheet. We need to spend a bit less. So maybe we'll rein in some capital spending. We'll rein in some more discretionary spending. So things like marketing, things like training. Unfortunately, I've got a training company. I think, my business will suffer.
Impact of the pandemic on earnings.
Well, the impact on the economy is very clear. I mean, nobody thinks the economy is going to be stronger than it was. The stock market is responding to a flood of liquidity, and that is quite